Right, we're going to talk about trading breakouts. The reason why I think breakouts are really important is because markets go sideways 80% of the time. So if you don't know how to capture breakouts and you don't know how to prepare for them and manage them, then your ability to make an income from day trading and invest well and stay in good breakout trades is going to be very limited. So I thought one example of breakout is gold, because this was fairly sloppy last year. Let me just put the range on the ear. By all means ask any questions. But you can see we had a big bust up, big break up in March into June, and then we got really sloppy the rest of the year. So the essence of a breakout is primarily patterns. There are 6 patterns to do with breakouts. They're all Fibonacci based. They're all Fibonacci related, I should say. And so if you know how to spot these breakouts, then you can hopefully get in early on and ride them out, because once a breakout has started, they're harder to get in. They're harder to get in from the point of view of risk management. Obviously, you can get into any trade at any point that you like, but when it comes to trying to capture a good risk-reward ratio, you need to know how to spot these and how to sit in them and look for targets. Now, as with any form of trading, there's a risk. There's a risk it won't work. So don't trade with money you can't afford to lose. You need to use professional risk management in any trades you do. I am not a registered advisor, so you need to trade under your own steam and your own risk parameters, not mine. Alright, so disclaimer, I do not know what I'm talking about. Don't listen to what I've got to say. Okay, end of disclaimer. Right, these patterns that I've talked about are not 100%, because nothing in trading is 100%, but they are high probability. Notice how I've got this structure on the gold here. Notice how we dropped out of this in the first week of January and continued into March, but when we did rise, we rose back into the structure and then failed. So the rise, so once you break down from a structure like that, that's a runner. That's one key pattern. If a symmetrical pattern like that fails, if a triangle fails, get short, stay short. And of course the upside is true. We had the upside, the reverse of that in gold here. So there's your squeeze, if you like. And one of the things that makes them harder to recognize, well, particularly as a chart like that, is notice how there's a lot of selling before this really picks up and breaks and runs. So don't be distracted by a lot of selling. If you come back, the structure is formed by all these touches up here in, I've got to use the right pen, hang on. The structure, this resistance here, is formed by these touches. 1, 2, 3. 3 touches is very, very common. Here you get a breakout. Here you get a false breakout. It breaks up, kisses the upside of the triangle, and then fails. So it dips down again. It's not uncommon with commodities. Commodities have got more likely to do this because they're lower volume as a whole. So it comes right back into this structure right back into it, and then immediately closes out. Now that is a very, very bullish sign. This is a key pattern, and to come into the triangle area and then immediately come out is very, very bullish. It struggles with this area here. Again, so you get distracted because that takes a good week or so. So you get another mini pattern here, and then it closes above, hesitates again, and then when the market is so chocker with trades, people are not being shaken out, then you've got no choice. Then the market maker's got no choice but to run that up. So you've got a main pattern here, and then you've got two mini squeeze patterns here, and then it finally goes. And once it runs, so how do you know that's a runner? You know that's a runner because you keep getting higher closes, but more fundamentally, you get an increase in volume. If you do not break on volume, be very careful. Lower your targets. If you do not break on volume, lower your targets. If you do break on volume, just trail your stop. Once you break here, if I'm trading around here on the 23rd of July 2020, I'm just keeping my stop out of trouble. Down here at 1880. If I'm breaking up here, and you've got these lovely little mini patterns up here. If you're breaking up there, then you can see where you are and notice, and then you get an actual sell signal. You get an engulfing bar, you get a new high and a close underneath it. You completely engulf it the next day on the 7th of August. Okay, so there's your pattern, there's your volume confirmation, and there's your follow through. Now for targets, most of you, anybody who knows me well, I know what I'm about to do. If you fib the initial range, you should get targets. So 127 was down there at 1853. You close above 1853 on the 22nd of July. So that's a key clue that this is a runner. Had that have knocked into 1853 and closed lower, then I would get out and look for retracement down to this previous high of 1767. That didn't happen. On the 22nd of July, 2020, that closed high and kept going. And then finally, you get to 1965 on the 29th of July. You certainly get, as normal, as with any market, you get some hesitancy. But then you open the new month, and then you finally get a sell signal on the 7th of August. So one way you could trade that is to stay in that trade as an investor and wait until you get a sell signal. Had you done that, you would have got out at 2033. Okay, now in order to get in the trades, how do you get in a trade like that? Well, let's tidy this all up. Start drawing the pattern for one thing, because notice how if I take this off, here's your neckline. Sorry, excuse me a second, let me get rid of this call. Okay, so how do you get in on these? Well, the main thing here with the gold in 2020 was that neckline. That neckline, again, it's formed from touches, the key touches. Initial 2020 January open high. The breakdown and the push higher into April. Then it sells off, doesn't it? So it looks bearish. It looks as if that has had it. But there's another trend line, there's another neckline coming up here. There's another channel. So you can see that channel as you get, now once it comes down here, look at the volume. The volume picks up. Volume is the oxygen of the markets. So if you've got a breakout in the volume and you're on a key channel, then getting that trade down here, you don't have to buy right on the channel. You can wait for confirmation here. That takes you up to about 1600, and then immediately you get a 1, 2, 3 wave push into 1700 plus. All right, so and then so you get the 1, 2, 3 wave push. Then you get it's so at that point it's so bullish it doesn't come and test this trend line until you get that drop up here. So this is a typical Elliott wave / Fibonacci type pattern. It breaks up. So at that point you get another trend line high up there, and then it get a 3 wave correction. That's a corrective wave into the neckline. And again, the volume starts to pick up again. So you got another volume confirmation here. So you get a volume confirmation on that test here, increase in volume. You get another test of a trend of a neckline with volume here. So these are really good entry points, and they're low risk, because if you take an entry down there with a stop just a few dollars away, the risk reward ratio, that's your risk, at least that is your potential reward. It goes further, and so these are measured moves. If you are in this, if you got down here on the buy signal or down here on the buy signal, you've already got that trend line formed up there. So by the time that hits the underside of that trend line, that's a great place to get out. If you want, that's a great way to set a target. Now this can apply to anything. It can apply to a stock, a commodity, an indice, a crypto, anything. All these patterns apply. Now every time, this looked really, it seemed to be just selling, didn't it? You even got a 3 wave reversal up there. But once it hit that neckline, with the volume, then you pull up. Now even here it doesn't look that great, does it? Let's enlarge that. It does not look, it's not shouting breakout, is it? Because it's really sloppy here in June. You get a significant move up here on the Monday the 8th of June, but you start to get some clarity here on the 19th of June. So again, on the Friday, it pushes up. It spends the next 2-3 days pulling into this. This is what I've been doing all along in gold. I've been taking measured moves on pullbacks, and then today, if I show you the screenshots I made, you can see where I've been calling the long out in the room, in the trading room. Right. Okay. So you've got a key neckline pattern. You've got as box number 1. So you got so you get your trend lines with the most touches. You get a volume indicator on the low of your chart, and then you look for key higher closes, and you look for tests of these trend lines. So if they've broken up from this one, breaks up here, hesitates, sits on the trend line for a couple of days, and then you get 3 very nice day move up there into this other trend line we talked about. So you've got trend lines all over the place, and you can measure the whole move by fibs. So once you have a main move set up there, let's take this March 6th high. I've done this before anyway, but let's just put it back on again. Notice here you can still use these extensions for buy signals at a later date, because once this breaks up, and again once this you got a huge run up here to 2100. No, it's not 2100. It's a decent number anyway. I think it was 2083 or something, you get a substantial drop in close to the trend line, so that pushes up again. All that support gets bought until you get the opposite. You get a breakdown. Breaks down to you can buy that extension. This is the breakup area, so it's just boomerang back to the breakup area, and then you get another shot at it. But by which time the history of selling at that point is too much, and you get too much profit taking on that high. Then you get three-wave correction, and then a three-wave wave back up to the area. Then you just start. Then it starts to get sloppy. The pullbacks don't work, and you start to just edge down to the actual breakup area. So this, to me, this is a boomerang. This is what I would call a boomerang. There's the boomerang that's been chucked up in the air and whizzed up really, really high. Now it's just come all the way back down to the breakout area, and then you get a double bottom, and then it winds its way back into a resistance area. So this is tradable. This was tradable. That was tradable. This touch of the trend line was tradable. You've got, if that breaks above the extension, you know you've got, just hang on to your hats. It finally pushes up. You can still, that's tradable, that's tradable. You don't know that's going to fail. You still get a decent move out of it. And ultimately, so test that extension, you get another move on that extension. And ultimately, once it settles down and boomerangs back, then you can get another three-wave move, correction, another three-wave move, correction, another. It gets sloppy, but that is still tradable. You don't know. The trouble is with these breakouts, they're very few and far between, and you don't know when they're going to stop. For example, here's a breakout setup. Nice little three-wave touch, closes above here's the triangle pattern again. It's a decent breakout, but it just doesn't go as far as the previous breakouts. We'll look at the stock in a minute. So double bottom, then you get a retest of, it kisses the neckline, goes on a run, goes on another three-wave move into resistance, huge selling here, and then it waves back again. So the buyable pattern, that's a buyable pattern. Doesn't last very long. This dropped into a Sunday open. I remember that. So it dropped right back into that area, and then goes on another three-wave move. So let's see where we are now before I go on to a stock example. Let's just so where we are now, purely in terms of patterns, because I started off this conversation talking about patterns. There's the master line. Now, admittedly, it's not been respected. We've dropped out underneath it in December. December was very, very sloppy for gold. But there is another subdivision down there. So as long as we stay above this, we have got the opportunity, as if we can now break that high. Alright, so that trend line's formed from the November highs and the December high and November high. So you should know what I'm about to say now, as you've listened to a few examples. If we knock up here and come back and kiss this trend line, maybe even come back into that buy signal. As long as we subsequently close outside of this, we should go and see 1900. So my prediction is, well, at the moment we're hitting resistance. If we can blast up and kiss it, then you need to get in higher. If we fall back into this recent buy signal, then you can get in lower. This will all be cancelled out if we start closing underneath, come back down to those lows and close underneath. then will fall out, and then you need to sell the underside of that potentially. Okay, so that's if it fails. But otherwise, assume for the moment that it's going to work. Buy a pullback into that, into this pattern, from the low of a couple of days ago, if it lets you, and then hang on to your hats. Now, as for a target, the most recent range is here. I'm only showing you gold as an example. We'll look at something else in a minute. So that's the most recent example. So if we close above 1840, we should test 1877. If we can hold above that, if we can come up here and break and hold it, then we should go to 1920 and 1974. Fine year. Okay, we're coming up. The volume is good. We do need to see a continuation in volume. If you do not see the continuation in volume and some of these higher volume levels, be cautious and potentially even stand back. We have to see this price supported by volume. Right, let's look at the stock. Let me think. Let's look at just trying to think of a good one. I know one. Yeah. This is my lovely BMI. I've traded this stock for quite a long time. How could you tell? So he had a huge fall. So watch out for this. So this is the breakdowns. This is a classic breakdown pattern. If you take there's the main trend line. Every time we breached it, we fell over. So if you see this pattern, stand back. We breach it, fall over. We breach it, fall over. Very, very. But then you got this big funnel pattern. You've got a trend line underneath it. So this is a fascinating chart pattern. Don't often see them. Now, had that closed above 68, then you got a funnel breakout. I've seen charts like this that have broken the highs here, and then just run, just gone crazy, just really broken out. This obviously broke down, and it's obvious to anybody who's been trading for any reasonable length of time to see that. So I won't insult you, but just to say that you get a pin bar in the top of the channel on the 23rd of August. By the 25th of August, you're closing outside of the funnel. So once you do that, if you do want to short, it is shortable. Ideally, I would short on a kiss of that funnel on the underside of that trend line, but you didn't get the chance. In ultimate, it breaks down. So there is the key to this is the way in which it breaks under here. Notice how it comes down on volume. So as it comes down, the selling volume increases, and then you get a capitulation here. And again, comes down with increasing volume. So the oxygen on the sell side was clear. Right, you get a fantastic reversal signal here, a new low in the range, immediate close above, and then volume picks up and it goes on a run. It goes on a 1, 2, 3 way run. So how can you trade it? Well, you could trade that reversal signal with a stop underneath the low. You break above that. So this is another mini breakout pattern, because you've got that coming down here. It's a mini funnel. Okay, let me draw it properly. This is the reversal of this down here. I'll explain why. So you basically, to find these, you just need to find a really good popular stock and track what it's doing. There's the main neckline. Looking for the most touches. Yeah, I would go right down there. That's the most touches. Then you've got a funnel pattern there. So you break down under the funnel pattern. This is incredibly bullish. This is one of the most bullish setups I think you'll ever see. You get a close underneath this neckline, and then you immediately close higher with volume. That is the best reversal signal, or one of the best reversal signals you will ever see. It looks bearish here because it engulfs 3-4 days trading there, but all it's done is tested the neckline. I've shown you many examples of that on the gold. Once you break up by the pullback, by the top side of the trend line, and then you get a three-wave route. So we're still in the process of, we're still in this wave is still continuing on volume. How can you set targets? Well, you can set visual targets with support and resistance, or if you want to throw the fibs on it, let's throw the fibs on this range. Right, so it's so bullish at the moment, we're sitting above this resistance zone. All fibs are is support and resistance, that's all. So this one at the moment, it's in a very vulnerable position, because this is where we broke down from on the 1st of September. So if we now close underneath, I wouldn't short this, but it could be shortable if it can't close above that zone. I'm not so much interested in the pattern at this stage, I'm interested in the way it handles this price. If it closes above 65 here, hold on to your hats, because that's coming to 68 and potentially 73, 78. A lovely stock, got really beaten up until the very 1st of December, and then that went on an incredible run. Let me think of another one. So we actually break out here. So there's your confirmed breakout. That's the pullback. So that's at this stage here. If you're buying down here, you've basically just got to trust the pattern, but you've got a support line underneath there. So you could buy that with a stop just a short distance away. Bearing in mind you've got a lot of volume coming in here, so the probability of that failing and rolling over is low. So this stock's gone from 52.85 at the moment to 65. So what's that? 65 over 52. Somebody do the sums for me. That's a decent increase, isn't it? You know what? Judging by that volume, I'm not sure this wave is over. I think this wave could go could continue. But get out if you're in this. Get out if it closes underneath that. Right, that's one good stock. Let me think of another one. Wow, that one's going really well. Now, let's have a look. This is an interesting one. This is Twitter. I'm tracking this Twitter. I think this Twitter's Bible down here. So let's mark this up. There's the main neckline. Now let's tell you what, let's go right the way down here. That's the most recent touch from that low on the 2nd of December. So this is very, very bullish. Nothing's guaranteed, but to come down there and close above this line here, if that subsequently closes above this line, if that can run up and close above 44.50, that's a runner. If we close back under 38.70, forget it. Short term, forget it. But that is potentially a very bullish pattern. There is your confirmation. So we need to close above this area here. We need to close above 42 and subsequently 44.50 if that's going to break out. But the probability of that breaking out is improving as volume is improving. So we need to see an improvement, a continued improvement in volume. Otherwise, this could be a false breakout. So if we now close back underneath 39.50, be very, very careful, if not consider getting out. But I think this Twitter is showing signs of potentially doing what it did in November 2020. In November 2020 it went from 39 up to 80. It doubled. Okay, let's look at this range. Yeah, so let's take all my other patterns off for the moment. Right, so the real test is going to be 48. If we can get up to 48, that's an obvious place to see some profit taking at 48 if it gets up there. Okay, so just to recap then, it's about patterns. Let's have a look at the Dow. Gold is still going. Yeah, the Dow is definitely still on probation here because we're just hanging. If we close above this 36,700, then I think we're going to see 37,038.5 pretty quick. If all we do is if this is just that's not meant to do that. A, B, C. So we are still not out of the woods on it. Yeah, if this is an ABC correction, we're potentially coming down to 35, 35.5. That's going to get cancelled out if this pattern holds. So 1, 2, 3, 4, 5. So if we're still in wave, if wave 4 is over and we're in wave 5, then the corrective pattern could be narrower. But okay, so at the moment we look as if we can go and find 36. I would suggest we can go and find 36.7. The question is, where do we go from there? Yeah, if that holds out, if that stacks up, then it's about where the corrective wave ends up and if there's enough strength in that market to push that up. But in terms of breakout patterns, let's have a look at Dow breakout patterns very quickly so I can then call my dad. we had a pattern down here. We had a pattern up here. Now this, just a look. It definitely got choppier up here. These were harder to call up here. These were definitely harder to call. This dropped down in 2nd December, did okay. So as long as you can, so we closed above the neckline there on the 2nd of December and then went on a little run. So these are, you can see the momentum in this market is definitely falling out. So there is, although we are picking up here and looking higher short term, longer term we are definitely struggling up here unless we get a significant push above that 700. Okay, so there are mini breakout patterns down here, but at the moment they're pretty feeble. So we've got to close above this 36.5 before we can suggest that we could be going higher up into that 38. Okay, but these patterns are really strong. If you look at, I keep pulling this example up, but gas really was a fantastic example down at those lows. Look at that. It's so strong. It couldn't get under that 35.85. This is another potential breakup pattern. Oops. So the gas already qualifies for a kiss. What I call a kiss and tell. It's kissed the upside of that breakout pattern, and so we could go back to 45, 46 here if that holds up. And the last time this happened down here, so if you take away, if I do this, if I take away what you see, it doesn't look that brilliant there, does it? Yeah, who's going to look at that and think, wow, that's a fantastic chart, that's going to double? You know, which is why you've got to draw on these charts. You've got to do your prep and find out where these patterns are. Okay, so at the point here on the August last year, if the key thing is, if you close above 40, that's a runner. Obviously, we've all got hindsight, but if I now then trickle that open, there's your breakout, there's your pullback, there's your return to the rotation back to the trend, closes higher, hesitates, pulls back to that 46. Now that should run from 46. There we go. Touches 46. It looks bearish, keeps closing higher, and then runs out of steam. Oh no, it keeps going. So it pulls back into the pattern and then really blasts up. And then finally it runs out of steam. Okay, so here we are sitting above 40 with the potential for this to run, with the potential for that to go back. So there's a current breakout potential. With this one and Twitter are just two of many charts that are threatening to break up. All right, any questions? You've been very quiet. Just get an update on the gold. Yeah, it's having a good run. It's gone right into this 20 resistance as predicted. UK stocks, yeah. Let's look at some. Let me think of good examples. Let's go back to rolls. Obviously, this is historic now because at the moment, so rolls down here. This one took a nice long time, didn't it? So we kissed the upper side of the trend line on September last year. There's your confirmation. There's your structural support, and there you get the run. So rolls is on the upside of this trend line. Volume is getting better. We just need this pullback to hold, and then see. So we've got to close above 130 now. If we can close above 130, I think we can go and see 150, 160 on the rolls. Let's think of some other examples. National Grid's an old one. Entry point. What now? Well, the entry point was here. Well, the potential for this to happen was 109. The confirmation was on the 21st of December, and the buyback, sorry, the break doesn't pull back, does it? 114.50, 60. It may come back into the triangle. May come back in the triangle with this fragility and the lack of momentum. So I would try and hold out for 120. I don't think you'll see it. I think this is going to hold. I could be wrong, but I think these prices here, 125, 127, may be all you're going to see. We had a false breakout here on the 26th of August, pulled back on the 16th September. So this may be, if this is a false breakout, we're going to close under 125 and come back in, if that's a false breakout. Yeah, I mean, if you get 120, 122, great. I would certainly risk 122. 120 is obviously better. But that I think rolls is one to watch, because I think this could really pick up. Yeah, as we start to open up again, hopefully soon, I would expect this to pick up. All right, I've got to run. Thanks a lot for your company, guys. Thanks for your questions as well. And I will be just look out for volume increases and these trend line support areas. All right. Yeah, thanks very much, guys. See you soon. Bye.